What's happening, everybody? Hey, it's Justin Croy with the Real Keeper Home Team at eXp Realty. Today's video, I'm going to be breaking down and sharing with you the Jacksonville Beach and Southside real estate market update report for July of 2022. Now, real estate's been a bit of a hot topic recently. It's been all over the news, it's been on social media with questions of a housing bubble, a housing crash, what's happening with home values and interest rates. So my goal is to share with you the real data of what's really happening here in the Jacks Beach and Southside area. So whether if you're a homeowner or if you're thinking about buying or selling, you know what's really happening and can formulate the best possible plan. Let me go and share my screen and let's jump right into the numbers. Stay tuned. And we're back. So before we go into the numbers, please subscribe and hit the bell in this video so you get notified when we post future content like this. So as we look into the July 2022 market update report for the Beach and Southside, the first thing we're going to look at is the fact that there was 238 sales pending in the market overall, which left 487 listings for sale. It actually resulted in a pending ratio of 32.8%. So you might be asking yourself, that's great, but what exactly does it mean? Well, I'm glad you asked. The pending ratio actually indicates the supply and demand in the market. Specifically, the higher the rate, the more listings are actually going under contract and quickly. Alternatively, the lower the rate means that there may not be enough qualified buyers for the existing supply. Currently, inventory is described as mildly active, which is still good for sellers. It does mean, though, that it is starting to transition a little bit. Now, when we take a closer look, you'll actually notice that at the homes between $200,000 and $400,000 price range, relatively had a large number of contracts pending. Alternatively, homes between $400,000 and $600,000, they actually had the largest inventory of sales or properties for sale with 147 listings. And the median list price was actually $529,000. So it actually was in that range. Now, as we look at the graphs below, we'll look at the first one. This one actually shows you the amount of properties for sale in relation to the amount of contracts pending. So as you can see, we actually see an uptick in properties for sale in relation to the contracts pending between $200,000 and $600,000. We see that as it goes past $800,000, the supply goes down, whereas the amount of pendings don't change all that much as you move further and further higher in the price points. Overall, homes between $200,000 and $800,000, what that is showing you is that there are more homes for sale, which is showing that the market is starting to change a little bit. Now, as we keep looking at down, we'll actually see that there was 1,410 contracts that closed in the last 6 months, and the median sales price of those contracts were $445,000. In breaking it down, we actually noticed that homes between $200,000 and $400,000 price range contain the highest number of sold listings. Alternatively, we also saw that 193 homes didn't sell. So you may be asking, well, why didn't they sell? Yes, there's many different reasons. It could be that they was priced too high. Could mean that they weren't adequately marketed, because that does happen. And also could mean that they were in poor condition. Or really just the seller just decided, I don't want to sell it anymore. I want to maybe wait and see what happens. We also did see, though, that the homes between $400,000 and $600,000 price range actually had the highest number of off-market listings that sold at 51 homes. Definitely good to know. So as we move quite along, we actually now want to look at the days on market. So the days on market is a great barometer. The common rule of thumb is less days on market means that it's more of a seller's market. More days on market means more of a buyer's market. And what we actually saw for this past month was we actually saw the active listings. They had a median days on market of 31 days. In relation, the amount of sold listings only had 13 days on the market. What that tells us is if it's a good home, priced well, good condition, checks all the boxes, those homes are going still relatively quickly. However, some of these homes, not saying they're not good homes, but they may be a little bit overpriced. They may be maybe not perfect condition. Maybe they don't check all the boxes. Maybe it's not the best neighborhood, best location. Maybe it backs up to power lines, and a lot of buyers may not like that. So there are definitely different factors there. But it does mean that homes are kind of sitting a little bit longer for the most part across the board. So we actually did see too that properties that were from $400,000 to $600,000, actually sold the quickest in the last 6 months. So obviously, as we've seen so far, the most homes on the market are between 400,000 and 600,000. The median price of homes is 529,000, in that range. And most homes that have sold the quickest have been in that price point. So since the recent days on market is actually greater than median days on market in the last 6 months, it's actually a negative indicator for demand. So you may ask, what does that mean? Well, all that means is demand is slowing down some. Whereas a couple months ago, we actually saw days on market for active listings less. Right now, they are starting to creep up some. The good news, if you're a seller, is right now the median listed sales ratio for this area is actually 100.2%. 100.2% means that you're getting pretty much what you're asking when you do go under contract and you sell your home. Again, a great example, $100,000 house, you're getting $100,200. So you're getting above your asking price. What that does mean though for buyers is, even though the median listed sales price is at 100.2%, that ratio, there are, as we're starting to see, there are some homes that are starting to go below that. And so there are more chances with those that are still active. And we did see, after analyzing the absorption rate, is that we actually have about 2.1 months of inventory based off the last 6 months, which actually is pretty much Jacksonville in general. We actually, for the first time in the past year, Jacksonville has actually gone over 2 months of inventory. To put in perspective, an equilibrium market where it's not a buyer's market or seller's market is 6 months. So 2 months is actually really good for buyers, even for some sellers. I mean, it was getting kind of hectic at times out there, having to, quickly, sell your home, move out. Sometimes you could get leased back, sometimes you couldn't. So it is nice that it's starting to slow down a little bit because it gives buyers a more of a chance. Again, because there's less competition. So as we look at these graphs, you'll actually see here median sold prices and median days on market. You'll actually notice that in May, we actually had our highest days on market, but we also had our highest price point. And you saw that the prices actually started to come down some in June, and they started to come back up in July, and then back down again in August. Whereas days on market actually came down in June and July. Sometimes maybe you could say because prices came down some. In August, which is accounting for the last month of July, we have seen now the days on market is starting to creep back up there a little bit at 13 days, whereas the median price is still kind of right there, that $445,000 average for the last 6 months, which is not the lowest, not the highest. Lastly, we're going to look at this graph or this table to just kind of look at some different data points to kind of take into account and consider when you're thinking about either buying or selling. So for the area, as we already discussed, the amount of homes that are active currently are 487. Now, of those 487, we have 124 that are between 200,000 and 400,000, and 147 that are between 400,000 and 600,000, which make up the majority of that 487. That being said, most of them, their current list price is somewhere between, averaging between 481, 474, 319, 318. So those are good numbers to know. And obviously pendings, same thing. Those $200,000 to $400,000 and $400,000 to $600,000 homes do comprise the majority of the ones that did go under contract. So, and as you see too, the ratios, as the price of the home goes up, the ratios actually go down. All that means is there's less buyers at those higher price points, which is pretty much the standard of what you'd expect. And that being said, obviously the area in general, we're at right around 33% is our list to pending ratio. Now, we did have the 1410 that did sell, and as you can see from where they sold, we have these red, yellow, and orange boxes on the far right. So what are these, Justin, you may ask? So these boxes, they're color coded based off of their estimated months of supply. The darker the color, the reds show that it's more favorable seller's market. As you get more to the orange and yellows, it starts to be more of a buyer's market. And the important thing to look at this is most of these price points are getting to be 2, 2.5, 3, 3.5, 4, 4.5 months of inventory. What we're most likely going to start seeing is these lower price points of 2 to 4, 4 to 6, 6 to 8 are probably going to keep increasing and might actually be, closer to the, 3 months of inventory in the next couple months, maybe even higher. So what does that mean for you as a seller? It means for you as a seller, you do still have a very good opportunity in today's market. Homes still are selling for above asking, but not as much as they were. And so realistically, if you are working with a realtor who has a proven repeatable system that is backed by market research, they most likely will be able to help you maximize what you can make on your house, as well as ideally helping you sell as soon as possible. Again, the good ones still are selling quick. That being said, if it does take a little while in the market, that's okay, because the market is showing that that's starting to occur. Last month we were under that 31 months that we are at this month. Next month we might be above the 31 months. It's just one of those things that as more homes hit the market and the demand of buyers do kind of slow down some, we are going to see some homes still a bit longer. 30 days though, if you had asked me a couple years ago about 30 days, I'd say that's a good time frame. So overall, that's what it kind of means for sellers. Now, if you're a buyer, what does this all mean? If you're a buyer, it means that you're finally in a position where you don't have to feel like you're giving a seller everything. You have the ability to be able to negotiate a little bit, kind of go under that asking price, especially if a home's been on the market more than 2 weeks. And so there are some wins there that you can save some money to use to the house after you buy it, not to buy it. That being said, there are less of you, and so with that being the case, sellers will have to start, I wouldn't say appeasing, but they have to start obviously meeting you halfway. So as a buyer, it's still a great time. As a seller, it's still a great time. And we do foresee that to still be the case. Again, we're not in any sort of market crash, market bubble. The market's just starting to come back to where it should have been and where it was 2 years ago. Part of that's because of rates going up. Part of that's due to other economic factors. But overall, this is all within the realm, all within the percentages of what is allowable. So with that being said, my name's Justin. I'm with the Real Keeper Home team at eXp Realty. I will post in the details section down below some links to if you want to ever schedule a call with us, do a face-to-face. The team and I would love to meet with you, discuss if you're looking to buy or sell, and discuss what steps you need to take to maximize your plan. And if you're an agent, looking for a new place to start, we're with eXp. We like eXp, and we're here to help anywhere we can. Whether if you're looking to join a different brokerage, or like I said, if you're looking to buy or sell. We always joke, we're not happy till you're happy, so we're gonna do everything we can to make you happy, and that still holds true. It's one of those things that the market is transitioning, and it matters more than ever now who you work with. As we say, who you work with matters. So without further ado, you'll catch me on the next one in August, and we'll go from there.